What's up, traders? Andrew O'Connell here with Pristine Capital. Today we're going to talk all things markets. We're going to go through the Elon headlines. We're going to talk about this price action. We're going to talk about why I took profits on the open. Let's dive in. So for our box scores for today, we had the S&P 500 up 0.3% after putting in a really nice gap higher. We had the NASDAQ QQQ finishing up 0.33%. IWM small caps finished out 0.43%. The Dow Jones basically finished flat, and the ARK Innovation ETF ended up being our top performer, up 0.76%. You can see most of these indices actually closed towards the bottom end of their day's range, and volatility actually picked up for most of these indices. That is a negative divergence when you have volatility rising alongside the market. Market breadth was positive, but you can see we only had 57% advancers in the small caps, and we ended up finishing out the trading day with 63.1% up volume. My trend model flipped from +1 to +3, and we ended up having a very solid trading day. So let's take a look. News for the day, we had Elon Musk, basically more drama about Twitter, and we were able to capitalize on this drama by selling some Twitter puts, and we were able to take those off on the same day. Let's dive into our heat map. You can see overall this looks like a pretty choppy session. We had Tesla leading the pack. Amazon had its 20-for-1 stock split, and it was pretty funny for most like trading platforms and software and analytics. It looked like Amazon was down 95% off the open, but it was just because of that stock split. Sectors. Take a look here. We have some new leadership emerging team. Our solar energy group was up 4.26%. That is now in our top momentum slot, and that moved on 2.54 relative volume. And our KWEB, our China internet stocks, they were also up 4.7%, and they moved up on above 1 relative volume as well. So definitely some new leadership. Those groups are really popping to the upside. And I did not take any targets on my China exposure. Style factors, mild action across the board. We had the high beta style factor finished up 0.65%, and that was our leader for the day. Now take a look as well. Let's dive into these actual markets and let's get a feel for what actually happened today. So check this out on the S&P 500. Basically what happened this morning, we mentioned this in our Pristine Capital Discord, is that the market was gapping higher, but we did get a volatility divergence in the market right at the beginning of the day. So check this out right here. And we also, now this is in front of your face, we made some updates to our position log. So I just added this little feature at the bottom, and it shows the percentage of winning stock trades and the percentage of winning options trades. I do believe I'm going to add some rules to my trading plan around these percentages, because the only way that you can take a big drawdown is if you have a high percentage of losing trades, and then you also have a lot of trades on the books. So considering implementing some sort of rule that, hey, let's say my percentage of winning trades drops below 50, let's say it's at like 30%, here's the maximum number of trades that I can have or positions, that sort of thing. But anyway, so this was at 9 o'clock, and I just put, on Friday, we noted the divergence between price action being down and volatility also down, as well as the separation between leading stocks and the indices as reasons to remain long. This morning, we're seeing a large gap higher in all indices, and you'll notice the title of Friday's video was flying in the face of perma bearishness, because yeah, the market was down big, but vol was down big alongside of it. And so I just wrote here, I'm going to offload my short-term options trade in IWM on the open for prudence. So we established in our weekend analysis video that, hey, we have this CPI data point that's coming out on this Friday coming up. And so into that data point, if we get, some big gaps higher, we get some nice strength in the market, those could present opportunities to sell into strength given the binary nature of that data point. And then look at this, at 9:33 a.m., I noted here as well, the VIX was up 0.89% into this big gap higher in equities. And the TDEX, which measures tail risk, this is put options on the S&P 500 that are 3 standard deviations out of the money. This was up 10.85%. So there were divergences off the open that said, hey, this is pretty much a gift to sell into. And sure enough, we did get some selling throughout the day, as usual over the last week. If you were just kind of punting and like you got really excited into the strength in the morning and you started becoming a believer in the rally, and then you bought a bunch of equities, you know, you're probably like really like shaking your boots right now and you're like, oh my gosh, what the heck's going on? But if you were prudent and you took some targets into this gap higher, then, you know, the move lower in the afternoon really doesn't matter all that much. So what did we end up doing today? I closed out my IWM July 15th calls for $7.32. I'd paid $6.36 for those. I also closed out the remainder of my BTO calls for $2.58. I paid $1.77. And then I also sold some Twitter puts. So Elon Musk, of course, like he had this big like headline this morning, and it was, you know, really just him trying to wriggle out of this deal with Twitter. And what's interesting is that if the deal goes through for Twitter, Twitter is going to get taken out for $54.20. And pretty much this morning, the stock opened up down 5%. And I was looking at it, I'm like, if the deal goes through, that's over a 40% winner for Twitter. Whereas if the deal does not go through, we're pretty much already trading back down to the levels we were at before the deal was announced. Check this out. Yeah, this was when the deal was announced. The stock just shot right up. But right before, the stock was at, $39.75. 40% upside if this thing gets taken out. Pretty much no downside if it doesn't. So I sold some put options on Twitter. Sold the short-term stuff, the June 17th 37 strike puts for $1.42. And I sent out a limit order to buy that Twitter back for a 50% winner. And literally a couple hours later at 150, I got taken out of my Twitter. So nice little 50% winner on those sold puts, all in the same session. I gotta say, that's actually never happened for me on a put sale. And then I also closed out half of my Restoration Hardware common shares. Closed those out for a small winner, about $304.50. I had paid $296.50. So yeah, I did all of these trades. Like this was at 940. These were, you can see 931, 936, 959, 1003. I pretty much did all my trading within the first 30 minutes of the session, and then I ended up going to the gym. So when I was at the gym, that's when like the market dropped and had its little like tantrum, I guess, intraday. But it really just goes to show, like, you know, if you're on the swing time frame and you're just kind of like coming into each session with a game plan in place and you know what you're gonna do, you know, even if the market has these little fits and starts and like, oh, we got up to the top of the weekly value area, we looked above and we failed. You know, it's not really the end of the world and you're not like shaking in your boots. So now I actually do have a little bit more cash to work with, and we'll have to see what happens into Friday. Again, Friday is the CPI data point. It is a binary event team, and we continue to see just these commodities moving higher. Every day, the CRB index, look at some of these names. These things are just ripping out to the upside. So at this point, it sort of looks like the commodities trend is really starting to go parabolic. And that's typically when you can see a big correction. Now, who knows how far this is going to go, but there's a lot of stocks in the group that are starting to look like this. So yeah, we'll have to see what happens. But one other thing before we jump off here is treasuries were actually very weak today. Look at these 10-year treasury futures. They were down 0.51%, breaking down below value. And we're actually getting very close to the lows for treasuries again. Same thing with the 30-year treasuries, but for whatever reason, the market remains strong. No harm in taking some profits into strength. We'll have to see what tomorrow brings. If we get a nice juicy little dip ahead of the CPI, I think that'll be a more enticing spot to add some risk. With that being said, that about does it for this post-market video, and I'll see you all next time.